Ladies and gentlemen, good day and welcome to the SMS Pharmaceuticals Ltd Q1 FY2024 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Today on the call we have Mr. Vamsi Krishna Potluri, Executive Director of SMS Pharmaceuticals Ltd, Mr. Lakshmi Narayana Tammineni, Chief Financial Officer of SMS Pharmaceuticals Ltd, Mr. Tirumalesh Tumma, Company Secretary and Compliance Officer of SMS Pharmaceuticals Ltd. I now hand the conference over to Mr. Vamsi Krishna Potluri, Executive Director of SMS Pharmaceuticals Ltd. Thank you, and over to you, sir.
Hello. Good afternoon, everyone. Thank you for joining the earnings conference call to discuss the financial performance for the quarter ended 30th June 2023. I hope everyone must have got an opportunity to go through our financial results and investor presentation, which has been uploaded on the stock exchange as well as our company website. We are delighted to report a strong financial performance in the first quarter of fiscal year 2024, characterized by substantial year-on-year growth in both revenues and profit. These results align closely with the projections we communicated in the previous quarter, demonstrating our commitment to delivering on our promises. The company witnessed a robust surge in its revenue, recording a year-on-year growth of 110%, amount to rupees 135 crores. The performance was propelled by the strong API business, which experienced substantial gains due to increased demand for its core offerings. In the first quarter of fiscal year 2024, our company achieved an operating profit of rupees 26 crores and a net profit of rupees 9 crores, with EBITDA margins and PAT margins coming at 19.4% and 6.5% respectively. During the first quarter of FY2024, we observed a notable improvement in gross margins, which can be primarily attributed to a positive impact of an improved product mix. Simultaneously, it is noteworthy that the raw material prices have remained relatively stable and devoid of significant fluctuations. The enhanced product mix, characterized by a strategic blend of high-margin offerings, played a pivotal role in boosting the company's operating performance. Based on our analysis, it is anticipated that the company will be able to sustain its current operating margin in the foreseeable future. The anti-diabetic segment has demonstrated strong performance, and our company has effectively established itself as a leading participant in the European market. The antiretroviral segment is currently undergoing a steady and progressive recovery with a promising performance prospects anticipated in the upcoming quarters. Ibuprofen, a widely used anti-inflammatory medication, has exhibited encouraging progress for us across all diverse markets. This can be attributed to the attainment of multiple regulatory approvals and a steady upward trajectory in sales and volumes on a monthly basis. Furthermore, for ibuprofen, the company is strategically diversifying its customer base and pursuing expansion initiatives in untapped regions, a process typically characterized by a time frame of approximately 6 to 9 months. Based on our analysis, we expect to witness favorable momentum for our ibuprofen product as we approach the conclusion of the fiscal year 2023. Furthermore, our company has successfully cultivated a robust foothold in segments like anti-migraine, anti-ulcer, and anti-ED. These aforementioned segments have demonstrated remarkable stability and have successfully cultivated a devoted customer base. Our firm has been actively engaged in these particular segments for a period of over 2 decades. Our primary objective for FY2024 is to enhance profitability across all product categories in order to drive cost optimization and enhance operational efficiency. We have charted a plan to allocate significant resources towards R&D initiatives, throughout the current fiscal year. This proactive approach underscores the company's commitment to innovation and its determination to achieve sustainable growth. We also have strategic intent to pursue vertical integration for high selected volume products, aiming to improve the overall margin profile in foreseeable future. Some API segment highlights I would like to highlight is Q1 FY24 revenue for the API segment stood at 132.4 crores. In Q1 FY24, API segment contributed to around 97.8% of the consolidated revenue. Within the API segment, 15% of the revenues came from the domestic market, 85% from the export market for Q1 FY24. Within the therapeutic areas, ARVs contributed to 10%, anti-diabetic contributed to 24%, anti-migraine to around 19%, anti-ulcer to 13%, anti-epileptic to 3%, ED to around 4%, anti-inflammatory to around 18%. And the rest contributed around 9% to the total sales in Q1 FY24. The company product portfolio is strategically positioned to capitalize on increasing market demand for APIs and intermediates, both in India and international markets. Our steadfast dedication lies in the continuous development of innovative products and implementation of cutting-edge technologies. These strategic approaches ensures our ability to sustain a competitive advantage over the long run. We have consistently demonstrated a steady improvement in operating performances since Q2 FY23 onwards, and we are cautiously optimistic that this positive trend will persist in the upcoming quarters as well. We are pleased to announce that we are strategically expanding our product portfolio and bolstering our capacity, a move that will undoubtedly fuel our future growth. Finally, I would like to underscore that our unwavering commitment to sustainable growth and delivering value to all the stakeholders is our utmost importance. We can begin the Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Priyanka Singh from Atidan Securities. Please go ahead. We have lost a connection. We'll take our next question from the line of Parth Vasani from KK Advisors. Please go ahead. Mr. Parth Vasani, your line is unmuted. Please go ahead with your question.
Yeah, hi, good afternoon. Am I audible?
Yes.
Yes, you're audible. Please go ahead.
Sir, just had one question on competitive landscape. So if you can just share what are the strategies you intend to employ in order to establish a unique position in this highly competitive industry.
Correct. So just to give you a brief, we do not have too many APIs. We hardly have around 35 to 40 APIs. But most of the APIs we are very strong and vertically integrated on most of the APIs. So that is typically has been our strength, and it will be our strength going forward. So I think around 70% of our R&D budget is dedicated to cost and process improvements of our existing products and towards backward integration of our existing high volume products. And only around 30-35% we are looking at new product development. So significant portion of our R&D spend is also towards cost development and cost improvement. So that probably will be our strategy going forward, because definitely as you go every day there will be a price pressure and obviously if you are reliant on outside outside parties to get some raw materials. So the price fluctuations will always be there. So if you manufacture it in-house, those can be limited to a certain extent. So that's our strategy going forward.
Okay, all right, sir. That sounds good. Sir, my next question was just on if you can just throw some light on your long-term growth plans. So
right now I think we have got a few projects that are coming up. I think our ibuprofen, our immediate plan is to make our ibuprofen one of the largest in the world. So that's our immediate growth plan, and definitely we will be adding more products, and we are exploring different other markets as well to increase the revenue and bottom line and profitability for the company.
All right, sir. That was helpful. That's it from myself for now. I'll join back.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We'll take our next question from the line of Jia Shah from Wealth Securities. Please go ahead.
Thank you for the opportunity. Could you kindly tell me, provide additional information regarding the specific factors that contributed to the improvement in our operating margin during Q1?
Sure. So it is mostly the product mix, new products coming in, and obviously few products we are vertically integrated. We've developed our own in-house intermediates for some products where, profitability has increased in that direction, and new products coming in, product mix is one of the key reason. And obviously, our betterment of profits on our ibuprofen also is one of our key areas that resulted in a better profitability.
Okay. And the operating margins, do you, feel that it is sustainable for the forthcoming quarters as well?
Yes, definitely they will be within in line with the present ones.
Okay, all right. Thank you so much.
Thank you. We have our next question from the line of Yash Mehta from AP Capital. Please go ahead.
Thank you for the opportunity. I would like to ask a couple of questions. What are your capex plans, and can you throw some color on the same?
Sure. There are no immediate major capex plan or greenfield projects at this point of time. We want to probably consolidate and look at mostly backward integration of most of our critical products and critical APIs, high volume APIs. So that probably I think basic capex. I don't think there is any major capex envisioned for this year at this point of time.
Are there any major risks you see on the raw material side which could severely impact margins going forward? Any other risk which you foresee?
I'm sorry, could you repeat your question?
Are there any major risks you see on the raw material side which could severely impact margins going forward?
No, at this point of time, again, it is definitely based on market fluctuations, but at this point of time, also China completely opening up from COVID also has, sort of stabilized the prices as well. So definitely there is some pressure on the solvent prices, which keep varying based because of the war that is still continuing. But apart from that, the regular normal raw material prices are always stable.
Okay. And my last question would be, what are your revenues and profit growth expectations for FY24?
So again, as already committed, we are expecting a 15% to 20% growth than our previous FY23 in 24. Both in top and bottom line.
Okay. Thank you. That's all from my side.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. You have a question from the line of Priyanka Singh from Atidan Securities. Please go ahead.
Yeah, thank you for the opportunity. I have a couple of questions. Firstly, wanted to understand what is your outlook on the overall performance of pharma industry for this fiscal?
Yeah, thank you. Thanks for your question. So think it's slowly, I wouldn't say that, it's totally come back to the pre-COVID levels, but I think slowly we are getting there. I think probably it'll take another couple of quarters for the entire pharma industry to, completely bounce back. But you could see, most of the, companies are, having good results, and, that you could see from the market that, obviously everything is not totally out of the woods, but slowly we are moving in a very, very positive direction. I think it'll take a couple more quarters to completely come out of that COVID, this thing that was there, but I think it's moving in a very positive direction.
Okay. And talking about our company, so do we plan to enhance the proportion of API revenue from the domestic market?
Definitely. But our major focus will be on regulated markets, because most of our facilities are US FDA and EU GMP approved facilities. So that's where, the profitability is also more higher. So our major focus will be export markets, but definitely I think with our high volume products like ibuprofen and sitagliptin, definitely I think the contribution from the domestic market will also be quite high.
And any existing plans on vertical integration?
Yes, I think we've already chalked out plans for more our big products, our top 5 products, 6 products. I think we've already chalked out plans for vertical integration, and they're already underway in terms of development, and each project is at various different stages at this point of time.
Okay, and lastly, can you expect a 17-18% ROCE for this fiscal?
I'm sorry, could you repeat it?
Can we expect a 17 to 18% ROCE by the end of this fiscal?
Yeah, I think it will be in the same rate, because I think this quarter is around 18%, right? 18+%. So I think it will be around that 18%, 19% range for the entire fiscal year. Yeah.
Got it. Thank you so much.
Thank you. A reminder to participants to press star and 1 to ask a question. We'll take our next question from the line of Rishabh Shah from Alpha Wealth Advisors. Please
Yeah. Hi, am I audible?
Yes.
Yeah. Hi, sir. I had a couple of questions. Thanks for the opportunity. So the first question is, what is our current capacity utilization, and how are we looking at this utilization going forward? What kind of ramp up are we looking at?
So right now our current capacity utilization is around 50 to 55%. Actually, at this point of time. So currently there is no immediate requirement of any major capex expansion at this point of time. So our idea is to fill it up to around 75 to 80% before looking at any, fresh greenfield projects or, a major expansion that we want to take up.
Understood. Next is the company has implemented an operational approach to diversify its product offering, and it's aiming to strengthen its position and capitalize on potential avenues for growth. So could you provide additional details pertaining to the recent product launches, like any understanding on that?
So are you asking about any information about the recent product launches?
Yes.
So recently we've not launched any product, in this particular quarter, but all our existing products have been doing quite well. So we are getting a good traction, and some ARV business that was not present in the last financial year has slowly started witnessing an uptake again from the first quarter, and we expect it to be in a decent phase in the next for the next couple of quarters at least. So it's all about tenders. It's tender-based business. So that's the only new addition, but we've not launched any new product as such in this particular quarter.
Okay. So one last question is, are there any new therapeutic products that we plan to bring in the marketplace going forward?
So, we are very strong in certain therapeutic categories like anti-migraine, anti-ulcer, we're very strong, and HIV space we are pretty strong. So, we are focusing of developing more products in these therapeutic categories that we are very strong in, so that, it will be a complement to our existing portfolio.
Understood, sir. If I could squeeze one last question. So, how does the company intend to expand into new geographical areas, and the company also began its operation in geographical areas? So, what is the contribution for the first quarter?
So it will take time, obviously, because registration of products and this thing will take time. And again, we have launched some new volume products recently. So previously we didn't have any huge volume products. Now we have launched new volume products. So we are exploring definitely different geographies and establishing customer base in some of these geographies. Definitely registration and all will take time, and it's a long process. But definitely the company is proceeding in the right direction. I mean, as you already heard in my speech, I think probably by end of this physical year, we could definitely have some, it's an incremental thing. You could definitely see some windfalls coming in by end of this year.
Understood. Thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We'll take our next question from the line of Dipti Kothari from Kothari Securities. Please go ahead.
So, thank you, sir, for the opportunity. So, my first question is, how did ibuprofen perform in the first quarter of fiscal year 2024? And what is the current pricing of ibuprofen and what is the market outlook for the same?
Sure. So, ibuprofen contribution is close to around 18% actually.
Okay.
18% in our first quarter, and definitely quarter-over-quarter, month-over-month is definitely improving. And as mentioned in my speech, I think we are getting new approvals as we go on along the way. I think we are getting new markets that we are opening up and new approvals from different territories where customers are pulling in our product right now. So definitely, I think to exactly assess the situation, maybe by end of this financial year, you will have a very clear picture, because by that time we will have all the approvals coming in and commercial product going in. So I think you will have to wait for end of this year to have a complete picture on ibuprofen. And again, it's a process. It's a very age-old molecule where it's not very easy to penetrate into various markets, where we're trying our level best to push it with the resources that we currently have.
Okay. And so furthermore, could you kindly offer insights into your present ibuprofen production capabilities and strategies for expansion, pricing dynamics, and anticipated growth in terms of volume?
So current ibuprofen pricing dynamics is that, like our current volume right now is around 700 metric tons is what we've have the capacity for at this point of time, and definitely expandable to 1200 metric tons per month is our, we have the facility to expand it to around that range. But until we reach around 80-85% of our existing capacity, we will not obviously go for a major expansion. So we are anticipating it to come in a year's time to achieve around 85%. So that's why in this financial year we're not envisioning any major expansions at this point of time.
Okay. And sir, what could be our projected market share in both the export and domestic sectors for ibuprofen only I'm talking about?
So it is difficult to answer that question because export and domestic markets, our approvals totally have not come in, as I was saying. So by end of this year will be a good time frame to assess at the position that we are in right now. See, this is all, at this point of time, sending samples, we are getting approval phase right now. So once the approvals have come in, the commercials will kick in very shortly. So we are at that launch takeoff phase right now. So maybe 7-8 months, I think, will give us a good realistic picture.
Okay. And sir, the anti-diabetic segment's revenue share has been witnessing considerable increase throughout recent quarters. So, sir, can you provide the anticipated goals for this segment in terms of value and volume?
So I think the segment will be pretty stable because our partner, it's a JV product with our partner Chemo. So they have a significant market share that's been captured in Europe. So we are one of the largest manufacturers that is exporting to Europe. So we feel that this is very sustainable, and we are collaborating in a very good way, and this should probably continue for the next few quarters as well.
Okay. Thank you so much, sir. That answers my questions.
Thank you.
Thank you. A reminder to participants to press star and 1 to ask a question. We have a question from the line of Karan Mehra from Vellore Advisory. Please go ahead.
Hello, sir. Thank you for taking my questions. So a couple of questions on the ARV segment. So in the quarter gone by, this segment has made a valuable contribution to our overall revenue. So if you could possibly elaborate further on the specific tactics and initiatives you have in mind, to facilitate the expansion and development of this business vertical. And also, is it possible for the ARV segment to attain a level of scalability comparable to its historical state?
Yeah, so just to give you a quick thing about the ARV space, so it's not our product directly. So we are doing a contract manufacturing for some of the big MNCs at this point of time. So we are just a contract manufacturing player. So definitely it is very much dependent on the tenders that, our partners win. So based on that, we get good business. So, so the tenders have been awarded to some companies, and definitely I think we were fortunate to be one of the partners with the companies that got these tenders. So we've been getting good business, and it's very difficult for us to envision how it's going to be in the next 2-3 years. But as of date, it's the company for the next couple of quarters. I think we are envisioning good volumes on the ARV space as well.
Sir, so any projected margins for this financial year for this segment, if you can give some highlights on that front?
So on the top line, it is going to contribute close to around 10 to 15% on the top line. So it used to contribute. So this was one of the products which used to contribute to around 40% a couple of years or 3 years back for us. But we've diversified into multiple other segments at this point of time. So even at a peak stage, probably the contribution will be around 15% to 20% at the max. It's not that we are reducing our top line, but since we've diversified, the contribution of that ARV portfolio has reduced in our portfolio.
Understood. So my last question, sir. So in this quarter, I believe we have year-on-year we have doubled our revenues. So congratulations on that front. So, sir, any plans to sustain this growth in the coming quarters?
Yes, definitely. I think as I was mentioning, so this is very sustainable, and we are envisioning a good few quarters as well. As things stand, I think we are not foreseeing any major hurdles, and we've got good traction from the market. The market is responding quite well, the API as well. So it's going to be it definitely should be good quarters. Good few quarters as well. Yeah.
Sure, sir. So that answers my question. Thank you and all the very best.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We have a question from the line of Dheeraj Sachdev from Roha Asset Managers. Please go ahead.
Yeah, I just wanted to ask and clarify. I think you spoke earlier about 17% ROC. When do you think that we will be achieving that in about 700 crores of capital that is deployed now?
Sorry, could you repeat your question, please?
I guess you mentioned about 17% return on capital employed that we will achieve. So how far are we away, given that we have about 700 crores of capital that is employed in the business?
The capital of the gross block of 600 plus crores, but the capital employed ROC, what you are expecting 17%, correct?
No, you told about 17%. So I'm saying how far are we away? When is
we are already delivering
that EBITDA we have already delivered 18 to 19.4% the current quarter, and before last year is about 20 plus percentage.
No, I'm not talking about EBITDA. I'm talking about return on capital employed.
Yeah, the capital employed is take time. This year we are expecting to stabilize to across 10 to 12%.
Return on capital employed, you are saying, right?
Yes.
Yeah. So 10 to 12%. So if I take 12%, it will be about 80 odd crores of EBIT number. Earnings before interest tax after depreciation, right?
That's right.
Okay. Okay, fine. So currently we did about 19 crores of EBIT, right? I mean, this quarter.
Yeah.
Okay. So that's what I'm saying. This is 10 to 12%. But how far are we away to achieve that 17% number?
So it will take time again, as I mentioned, right? So by end of this year, I think we will be in a very, very good position because that's when our major products will, take off in a very good phase. So I think by end of Q4, I think we will be in a good position to get around 15 to 17% approximately.
Okay, so you're saying that for the whole year it will be 10 to 12%. By Q4 you should be able to achieve 15% ROC, right?
From there, yes, that's right.
And then next year again the trend could be maintaining 15-17% ROC for
the full year. It will maintain going forward, yes.
Okay, and what will drive that number? Is it the utilization? Is it the pricing? Or the product mix which is going to be better? What is going to drive that number?
It is definitely the product mix and our good products moving quite well, like the volumes moving quite well of our big products.
Okay, fine. Thank you so much. All the best to you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. As there are no further questions, I would now like to hand the call over to Mr. Vamsi Krishna Potluri for closing comments. Over to you, sir.
Thank you, everyone, for joining on this call. Please reach out to our IR consultants, strategic growth advisors, or us directly should you have any further queries. Thank you very much. We can now close the call. Thank you.
Thank you, sir. On behalf of SMS Pharmaceuticals Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your line.